Hopefully you can see my screen. Just turn around. Yep, I think you can. There we go. I've got this up for a particular reason because it does illustrate the point that I often make about which I know a lot of traders disagree with me. That's fine. We all have different opinions. But this really does demonstrate the two aspects of either trading on Globex, when Globex is trading in isolation, or trading when you have both markets, the cash market and the electronic, running together. And what I always maintain is that if you're trading on Globex, which is essentially, just to put you in the picture as to where we are in time-wise, this is 8 o'clock UK time, so this is the start of the London Forex session. So we're through here. This is 9 o'clock, 10 o'clock our time. We get this nice trend developing. The price action in Globex will tend to be more even paced, not so volatile, more measured. We get this nice run up. We can see the trend monitor here is bright blue throughout. Then we get the transitional through, very typical colors through to the darker blue into the darker red, out the other side into the bright red, once we've got the complete transition. But it just gives you a classic example of why it is that there is such a difference in terms of, just in terms of the price action, let alone obviously in terms of the volume down here. This is where we are. We've obviously, in the UK here, we've gone back in time and now, so our clocks went back at the weekend, hence the reason that the US market's now open at 1:30 rather than 2:30 our time, so they will catch up at, I think, next week or the week after. You obviously get the massive surge in volume, but what you also get associated with this phase of price action is huge volatility, big swings, a lot of whipsaw price action. And to be honest with you, unless you are very light on your feet, and I've explained how to do it in previous videos, previous webinar sessions, where you go down to the 15-second time frame, and I've got it up on a different workspace. If you're not comfortable with that sort of time horizon, if you're more comfortable with the 5, the 10s, the 15 minutes, then I maintain, and I always will maintain, that trading on Globex alone is a much more even-paced price action, less volatility. You're not dealing with a whole bunch of algos that come in at this point. Everybody is waiting at this point here for the market to open. Everyone jumps in here. You get this massive whipsaw price action. Always see it every single day of the week. Huge ton of volume comes in down here, as you would expect. And that is not to say that the volume here is not demonstrable. Of course it is. It's just what's the word? It is distorted by the fact that you've got this huge increase. But I can assure you, prior to that point, this is all very demonstrable price action, but it's much more even paced. It is even paced price action. So if you are trading index futures, all I would say to you, this is a 24-hour market, and I would consider trading if it suits your time horizon. Obviously for us, as Anna said, we're very privileged. We're in the Northern Hemisphere. We get all the best of everything. We get the best of Forex at 8 o'clock London time, the deepest market. We get all the electronic markets through, in the session. Then we get into the US session, so we get the whole lot in our own time zone. Yeah, that's right. So I just wanted to make the point because this chart makes the point very clearly for you. At least I hope it does. What I've got on the workspace, I've just got the 3 indices, and unlike yesterday, which was a massive day, it was a day for loading up, for making a lot of money, and really filling up. On those sorts of days, these are the days you have to make money because it was moving fast. All 3 of the indices were moving very rapidly, all moving in the same direction. Today we have divergence, which I'm not particularly keen on. What we've got here at the bottom on the dailies, we've got the YM, which is lower. We've got the NQ, which is up, and we've got the ES, which is struggling and has been up and down all day and is now going to the downside. And that's all reflected on the 5-minute above. So you've got the 5 minutes equivalents to the YM, the NQ, and the ES. They're all trading around the volume point of control, which is here, this yellow dashed line. That is where we're sitting right now. And if you follow Anna's analysis over the last 2 weeks, we have been saying this market is structurally weak. We've been suggesting it's going to come all the way down, back down to VPOC. VPOC actually hit it yesterday on the YM. It's got some way still to go on the NQ, but there's more bearish pressure to come. and the same on the ES. So we're expecting further downside momentum in terms of the indices. So that's where we are. Let's go to the multiple time frames where we've got the 15-second and upwards. Oh, I haven't even got it open yet. Oh dear, sorry about that. Hold on a minute. Yep. Sorry, I just flipped over onto the multiple time frames. I've gone to the YM because I think that's the one that may well move. Just refresh that. There we go. So we've got the 15-second, 1 minute, and the 3 minute across the top. We've got the 5 minute, the 10 minute, and the 15 minute down the bottom. On the 15-minute time frame, just pop this, let's move the chat box out of the way. We've got the volatility trigger. This is where we're starting over here. So we've got lots of volume coming in. We've got a big volatility candle here. We're trading around this point here. So we are now expecting congestion. We're getting congestion, and we're now looking for potential break to the downside. What's our level going to be? Well, we want to clear this level here below the bottom of this particular candle and then start moving lower. So that's what we're looking for in terms of 15-minute. If you're up on the 15-second, over onto the 1 minute. Let's pop the 1 minute up and go through them. Okay, on the 1 minute, again, volume point of control in evidence. Ton of volume sitting around that. It's the heaviest concentration of volume. Below that, we've got a very nice platform, what was a platform of support from the accumulation distribution indicator, which basically presents these levels in a visual way, because what it does is it prints them in a thicker aspect. So where the heavier concentration is, it will be thicker, and where there is less concentration, then it will be thinner. You can see it's starting to break down now. Trend monitor's bright red, so it looks as though we've got a decent move potentially underway. So on these levels, these are all price-based. This is support and resistance from a price perspective, and each time these levels are tested and hold, then they paint a thicker level to the line. So it gradually gets thicker and thicker and thicker. It's like Popeye eating spinach. The more spinach he eats, the bigger his muscles grow. And it's the same here with the accumulation distribution indicator. And where you get clusters of them, these on their own are very minor. This has been tested twice. This has been tested 3 times. This one here has been tested 9 times. But when you get these little clusters together, they act in concert together. So they do act together to provide a stronger level. So they, although individually they may be relatively weak, when they start to cluster together, then they become much stronger. Now we've got a little bit of reaction going against us. The level here is going to act as a resistance to a pullback and protects us in the event of a move against us. We're now breaking away from the volume point of control. We're starting to move down into this low volume region here. We should see it move through there relatively quickly. Why? Because there's very little in the way of volume. Now this is on the 1 minute. Let's hop up to the 2 minute. Sorry, the 3 minutes, the next one I've got up here. There we are on the 3 minute. We had decent volume, we had rousing volume, a very thin volume under that upthrust, sorry, not the upthrust, the market, the move higher, very thin region of volume associated with that move, so it wasn't looking particularly strong. Good volume under this down candle, so that looks fine. No wicks to speak of either side. So, you know, that all looks good and dandy for a further move to the downside. Again, you can see the accumulation distribution indicators. Note the strength of that level, being tested repeatedly. See how often it's tested, hits it. And the other thing to note about it is these are not vague areas of, you know, maybe 50 points or 100 points. Oh, we've got some congestion in this area. These are absolutely precise. They are pinpoint accurate to the nearest point or the nearest pip, whatever chart you're using. So it just gives you a sense of how important these levels are and how accurate they are from a trading perspective. So it's not a vague level, they're very precise. Starting to see this break down further. Trend monitors transition through. We had a little bit of a pause point here. We've gone out the other side into bright red, which is great, helping to keep us in. We've got rising volume. So we've now got a falling market with rising volume, which is good to see because that's telling us that the selling is increasing, which is great. Let's go up to the 5 minute, see where we are there. Similar sort of picture. You can see how strong this was the chart I was showing you earlier on. The trend monitor has held right the way through this. It's basically saying, nope, this market is bearish. Just stay short the whole time. Let's go up onto the 10-minute. There we go. And finally up onto the 15-minute. So when you look at it right the way through, let's just move that up a little bit. There we are. The trend monitor was designed with one objective, and that single objective is to keep you in a position once you're in, because the hardest thing to do in trading is to actually stay in once you've got a profitable position developed. Because your emotion will want to get you out of that trade. Once you've got some profit, you want to close out, get out of it, run for the hills, get away and bank it. And you know, I don't want to. I feel uncomfortable with this market moving against me. I had some nice profit, and now I see it dwindling away. And that's what the trend monitor has been designed to do, to keep you in through these various stages of price action where you get these reversals against, and you're thinking, hang on a minute, you know, is this a full-blown reversal, or is this just merely a pullback, a pause point in the trend lower? And as you can see there, the trend monitor is bright red right the way through. This is what I meant on the 15-second. If the market is choppy, it's perfectly feasible to trade, but this may not suit your trading style or your approach. You may not feel comfortable with that. You have to decide, you have to find out what suits you in this business. Trading around the volume point of control works exactly the same way across the various time frames. So we're in congestion. We are in congestion, and we're probably going to stay there for a little while. So when you get a move developing and it comes down to the volume point of control, then that is what you're expecting. It's all about anticipation. Let me just pass back to Anna for one moment. Do you want to stay on this chart or move back?
I'll do it. Don't worry.
Okay, hold tight.
I'll come back to David literally in a second, because it looks like you've got a nice reversal going on there, David, haven't you? Off the I, on the other hand, are having a bit of a struggle here on the S4. You can see here we've had one test, two tests, and three, and it's, you know, it's not going to go through. Is it going to go reverse off here? Well, you know, a little bit of patience is now required. And actually brings me to another point. I had a message on my, I mentioned it this morning on my Twitter feed, from someone who trades, I think it's the trades either the Nifty in India, or Indian stocks. I don't know. All I know is I couldn't actually look at the, couldn't see the ticker on the chart. But essentially, he uses VPA, and he's really grateful for it, because in the last 4 months or so, he's had a great success trading the daily charts, actually. So that's good to know. But we had one trade that didn't go his way, where essentially he took a short on what he thought was a shooting star. It wasn't quite at the top of a trend. A shooting star is obviously the reverse of a hammer, where you've got the price rises and it falls back, and you really do need a lot of volume underneath it. And it's a classic sign of weakness if you've just looked at the price action. But if you've got the volume underneath it, and it did have volume, I have to say it did, but it didn't revert, it didn't sort of roll over straight away. We had a couple more candles, up candles, but with falling volume. So, and this brings us to another point about VPA, and that is, when we first started, when these strong candles come in, such as shooting stars and hammer candles, you think, oh great, I've got a fantastic reversal. And I think David has got that the same on his chart. And the temptation is to say, I'm going to take it. You can, and I'm not saying you shouldn't, but it comes down to how aggressive you are as a trader. But you have to accept that if you are going to take an early signal of a potential reversal, which is what these strong candles are telling you, then there is perhaps a greater risk that that signal may not play out, or it will only play out for a short amount of time, because maybe, you know, some news event will hit the market, and, you know, it won't go, it maybe carry on higher as that chart did, and then it will roll over. So just be aware that, you know, these signals are great, as I said, especially, you know, two-bar reversals. A two-bar reversal on one chart is actually a hammer on another, as it were, or the hammer itself on the chart you are trading. Or you can simply say, look, that's great, it's setting up, I'm going to get, you know, it looks like it's a nice setup, and then wait, and then, you know, as I said, on the shooting star, wait for the reversal. But you also then have to look at what is happening in terms of support and resistance. So as I said, on my 15-minute chart and my 5, I've got it, it's, you know, clearly it's doesn't want to carry on, you know, lower for the time being. We've got some buying coming in here. This average line for the volume, it's, you know, it's a reasonable amount of volume, but it's not above average, as it were. We've tested it again. It looks like some buying attempting to come in here. And if we go on the hour, we know it's a strong level because it also just happens to coincide with a similar level S4 on the hourly chart. They don't normally coincide. It just so happens at this point. And it looks like, what's the time? We've still got another 20 minutes to go. So it's too early to say whether that's going to end up as a doji. And we know there's a bit of a struggle, because look at the Renko. The Renko is saying, you know, there's not a lot going on at the moment. So I'll just keep on watching and waiting.
There we go. Nice little VPA example. If you're short here, this is fine. We then get down, we're through the volume point of control, we've got decent volume, but then we start to see this one's weak, and then we see the buying coming in. You've got buying coming in here, definitely buying coming in here, and that's followed by more buying coming down there. So you're expecting some sort of reaction. And whether you're seeing this on the 1-minute chart, or whether you're seeing it on a 5-minute chart, or wherever it is, if you are in a short position and you start to see that sort of volume price activity, then you know for a fact there at the very least there is going to be some congestion, possibly a reversal. And one of the things that we cover in detail in the Forex education program is looking at these reversals from a volume perspective. And the power of the volume price methodology is that it differentiates, and it gives you an understanding of whether what you're seeing on the chart is a full-blown reversal, or whether it is simply a pause point, a minor pullback in the primary trend. In other words, you've got a primary trend lower, you get a pullback, the market moves slightly higher. Is that actually a full-blown reversal? In other words, is it reversing from a primary bearish trend to a primary bullish trend, or is it merely a simple pullback? Now, what we've got going on here is we've got congestion around the volume point of control. You've got a very heavy area of price resistance acting overhead. And in terms of congestion phase, you know, that's what we're seeing at the moment. We've got it up on the 1-minute. We've got it, where are we, down? You know, the market is not moving with momentum right now. I've got the VIX up. That too is flip-flopping around in a relatively tight range. I'll just pull that over for you so you can see what's going on there. There we go. This is what the VIX is doing right now. You know, it's in sideways. It's not, you know, there's no strong trend. Unlike yesterday, it was all one-way traffic. At the moment, it's not doing that. We're trading around the volume point of control. Volume point of control. The volume point of control is higher here. It's a sideways price day, And in order to trade that, yes, you can trade it, but you've got to go down to these faster time frames like the 15-second, which may not suit you, or the 10-second, or the 30-second, whatever it may be. Just going to see what's happening in other markets. Just going to have a look at checking on gold and oil. Find those very quickly. Let's have a look at gold. Gold on the day is in heavy congestion. It's been there for an awful long time. That's where it's been sat. And again, it's we mentioned it this morning. When you get the VPOC here, this yellow dashed line, which is the fulcrum of the market, what you also find associated with that is you get these very strong price-based levels building on the accumulation distribution. So we've got a very strong platform of support starting to build here below, and we've got an equally strong ceiling of resistance up here. And what that gives you is it gives you a very clear indication of levels. If you're looking for breakaway trades from this particular area, you know, it gives you a very clear picture on levels. Go up to that level. Classic example of a trap move on the volatility. Ton of volume coming in, it's what we expect to see. We get the volatility trigger. We know the big operator in here because the volume has absolutely spiked exponentially. We get a second signal here. Then we get signals of weakness, trading around the VPOC once more, and now we're starting to roll away from it. This is a classic trap move. When the market moves that rapidly, you can imagine if you're in this move, you would have been perhaps you're in this trade. Market moves into congestion. You then get this snap move higher. You think, great, you know, load up, pile in, or maybe you're not in yet. You're waiting for that move. When the market moves that rapidly, your instant reaction is to jump in, and that's where you get trapped. And it's clearly telling you that from the fact that we've got this massive surge in volume. It's a clear trap move. The volatility is triggered into congestion around the volume point of control, and now we're breaking to the downside. And all those traders who jumped in here will now be regretting that decision, because they'll either be stopped out or they'll close out at a loss because they've just got drawn in. And it's what I was saying about the whole business of emotion with the trend monitor. What the volatility indicator does, it tells you instantly. It works on average true range. It tells you instantly. And the nice thing with the volatility indicator, you don't have to wait. Now, obviously on a fast chart like this, it's neither here nor there. If you're on a 15-second chart or a 30-second chart, you know, it's going to come up pretty quick. But if you're on a 5-minute chart or a 15-minute chart, it's very, very important, because it will trigger before the candle closes. So as soon as the metric of the average true range has been met, it will trigger in real time. So you don't have to wait for the candle close. And that is a huge, huge benefit to you as a trader, because then you know, and if you're in a profitable position, maybe you take the long position here. My advice is always the same: close out all the position, or if you've got multiple lots on or multiple contracts on, then take most of them off the table and just leave one or two to run. But generally speaking, I would say 99 times out of 100, I will close out completely and wait. If the market carries on higher, fine, which sometimes it does, or lower sometimes, that's fine. If it's trading in my direction, then I'll just jump back in again. But if it goes sideways, I've lost nothing. I'm not being squeezed emotionally. And if it reverses, I'm quite happy. I'm sitting there. I've got my profit in the bank. I'm doing something else. I'm trading some other market. So it's just a nice example there. And you can see it also reflected. We got it on that chart. We've got it on 1 minute too. So if you flip that open, you know, that's just a microcosm of, or the 15-second was a microcosm of what is going on the 1 minute time frame. Absolute monster amount of volume coming in on this particular candle. You know, that is not a candle of strength, it's a candle of weakness. Massive selling in this candle. Big wick to the upper body. More weakness on this one, trying to rally. Volumes falling away, then we get another effort to rally and the market closes lower, and that's going down. Where is it going? Potentially right back down here. So there's another 2 or 3 ounces of $2 or $3 per ounce there of potential price move before we get back to an area where we might hit some congestion. And that's all trading's about. It's looking at the VPOC histogram. What information is it giving you? Well, it's telling you you've got a little low volume area here, which is tiny slither, but you'd expect it to go through there fairly rapidly. But if it does go through there, it's really nothing to write home about, because you immediately move into this high volume area here. So that's going to cause you a problem in terms of a rapid move to the downside. You've got lighter volume here, and then you're down to the VPOC. You've also got this very heavy area here of potential price support on the accumulation distribution indicator. So that is giving you a heads up that there's going to be, at the very least, 2 or 3 reasons to expect the price to congest in this area for some time. So the question you've got to ask, if you're going to jump into this one now, is, is $2 an ounce enough for me? Where is the market going to pause? It's certainly going to find some heavy support coming into play here, so that's likely to cause it to pause. And certainly this area, you will see it pause at that area as well. But it could be any chart. This happens to be gold, but it could be anything. And all the charts are giving you a similar sort of signal in different time frames. Big effort to rally, big wick to the upper body, 1.5 tons of volume coming in, weakness, big wick to the upper body, more volume under there. It's weak. Simple as that. Let's head over to just have a quick look at oil. Oil is longer term congestion on the dailies. It's going to remain there for some time. We write about oil regularly. Anna writes about it on her site until the supply is, or demand rather, comes back and or supply is managed by OPEC. Then oil is going to trade around these regions for some considerable time. That's not to say it's not tradable intraday. Of course it is. You've got a little move to the upside developing. This is on 1 minute. Trend monitors transition, decent volume under that, but you've got a wick to the upper body. You've also got now a little 2-bar reversal in there, so that doesn't look particularly strong right now. The trend monitor is blue on here, so that's okay. You can see that's on the 5 minute. We had the move to the upside, then we had some weakness coming in here. High volume, reversed, carrying on higher. Hold on 1 moment. Looks as though it's going to carry on for a little bit. You can see the trend monitor is, as I say, is supporting. This trend monitor is there to support the price action and to help to keep you in. And that's what it's doing at the moment on the 15-second, 1 minute, 3 minute, 5 minute, 10 minute blue. Forget about the daily because that's too far out for you. But that's what it's giving you as a signal at the moment, saying, yep, fine. We've got these pause levels in here. We've gone into congestion, but we're moving higher. We've got good volume under that candle, so that's fine. Nice wide body candle, little wick to top and body, no problem at all. So that's all good. And we're pushing on up, and we're now moving into a low volume area on the volume point of control. So we should move through there relatively rapidly, all things being equal. Let's go up onto the 3 minute. There we go. Similar sort of picture. Nice. We've got rising volume here. We've got rising price, which is what we want to see. Want to see the buyers coming in as pushing the market higher up through these areas. On up we go. Nice volume, nice trend developing. Down onto 5. I've got this volume closed off. You can actually adjust it on the indicator. If I go into the indicators, we go onto the volume here. I've got this on bar close, as you can see. I can just change that over to on each tick, and that'll then apply it. And you can then get the volume coming in real time. I just have it closed off because I have a lot of stuff coming in here. So what we're seeing there is nice volume coming in. We want to see this candle close off with a nice flat top. Don't particularly want a big wick to the upper body. Want to see it closing off nice and flat. And then that just gives us confirmation that the trend is being maintained and likely to continue further. Now what we've got on the 15-second, you can see here, literally just triggered as I was speaking there. Ton of volume again, volatility trigger. What are we expecting? Congestion or potential reversal. What we're seeing right now is congestion. It's what we expect to see. So if you're in this position and you've jumped in late, close out, take your profit, get out, wait. If the market carries on higher, fine. If it doesn't, if it reverses, equally fine. You don't care. It's a massively powerful indicator, ridiculous price of $57. Should be 10 times that price because that's the amount of money it will save you in a matter of days, I can assure you.
Sorry, I've just answered this question if you want to go in there as well.
Okay. That's what we're seeing there. Have we got volatility anywhere else? No, we haven't. So it's not strong volatility because the slower the time, as always, that will carry more weight. Whatever you're doing in trading, the slower the time frame, then the greater the weight of that particular signal, whether it's support and resistance, whether it's volume, whatever it is, that will carry more weight. So we're not seeing it in any of the slower time frames. So we expect it to be relatively mild in that respect. Nevertheless, that gives us a heads up as to what was going on here. Now we're waiting for is for a break up to, let's say, 46. Once we're through 39.46 a barrel, then that's clearing away from that volatility area and on up to the next level. But we have to wait for it to clear that particular candle. You can see how that price on that, the wick, upper wick on that last candle topped out at exactly the same price point. What we want to see is a clear move through here. In other words, a close above 39.46 or 39.47, and then on up to the next level. Thanks, Danny. I've got the chat box closed. Have you noticed whether the volatility instrument more in fast charts in longer time frames? Yes, I would say so. Because what we normally say is that when you see it on the dailies, and particularly certainly the slower time frames and the dailies, the weeklies and the monthlies, if you see it on those time frames, the weeklies and the monthlies, that is very unusual. The dailies is unusual, let's say. You do see it, and when you see it, then it's a really strong signal that expect some congestion on an intraday basis. So yes, the short answer is you do see it much more frequently on the faster time frames, but of course on the slower time frames it has even more significance. As I said just now, the aspect of time will always carry more weight, whatever it is you're considering, purely because time carries weight itself. So anything that happens on a 1 minute chart will trump anything, excuse the pun about the election, all that, but it will trump what's going on a 15-second chart. And likewise, a 10-minute chart will carry more weight than a 5-minute. A 1 hour chart will carry more weight than a 15-minute chart, and so on down the stream you go. This is now moving nicely. We've gone through, where were we? 46, I think I said. Okay, now we're up to 52. Nice move. It's moving along. I'm keeping an eye on the VIX. That's still flip-flopping around, wallowing all over the place. So, there's probably not a great deal going on there. So you always, if you're a futures trader and you're happy hunting out trades, then you go hunting for whatever is available. If there's nothing in index futures, then you go hunting elsewhere. You go and look at gold, you go and look at silver, you go and look at oil, or you go into the softs. There's always something that's tradable if your market is not trading, but then that may not suit you, and you have to have pretty deep pockets to trade the futures anyway, and you may prefer just to become an expert in one market, one future contract. A lot of people just trade oil, or they just trade gold, or they just trade index futures. That's where we started in the 90s. No internet. It was all done over the phone through the floor of the exchange at Liffey, which is no longer there. Unfortunately, it was happy days and great fun. And now it's all electronic, but the principles are exactly the same. A little bit of weakness coming there on 15-second. Little wick there, decent volume under there. Maybe a little bit of a reaction. But you can see the trend monitor. The trend monitor is bright blue throughout, and it's really just helping to keep you in using multiple time frames and volume price analysis and the other indicators as well, just giving you that heads up as to what is going to happen next. And that's really what volume price analysis is all about. Let's just go back onto the indices and just see what's going on. Not a lot, short answer. Really very little. Very little tradable anyway. Let's have a look at the S&5. And again, this just makes the point that I made earlier on about the whole business of trading. This is Globex, really nice move into Globex, terrific. Then we get into this. So the question is, which would you rather be trading? Would you want to be trading in this, or would you rather be trading this? And I think it's a rhetorical question, which I'm sure you will give your own answer to, but I know which I would prefer. And that's why I say that people who suggest that you can only trade index futures when both are running, I'm afraid, are misleading. Let's put it like that. And bear in mind, we've been doing this for 20 odd years, so it's not a case of we've only just started. We have been doing this for a long time, and long before the internet also, when all the trades were placed over the phone, as I say, through the brokers onto the floor of the exchange and back again, which was stressful in itself, but good fun. Okay, I don't think any of those is going anywhere particularly at the moment. Let's just go back onto oil, see where that's got us to. Okay, that's coming off a little bit. It's what we expected. Why did we expect that? Because we saw it here. There's the volume, there's the price action. It tells you what's going to happen next, and that's the power of volume price analysis. Where is it going to? We're coming back down onto the volume point of control, which has now moved up to this level. Volume is building. We've got all this volume profile building around. So when this market breaks, what we're looking for is, are we moving up to low volume regions like here and here, or are we approaching high volume regions? What have we got in the way of price-based support and resistance? We've got all these levels on the accumulation distribution. We've got one here, which is coming into play as a little platform of support here, and on we go. Let's just see if anything's going on in the gold market. Anything that's tradable there? No, that's all pretty much sideways as well. So there we go. I am going to wrap up at that point, I think. Let's just check I've answered all the questions. Yep, fine, excellent. Okay, that's good. Let's just pop that up. Let's just get rid of that. This is where you'll find all the indicators. Oh, let's get rid of that one over there. That's the time and sales. We're going to be doing a lot more of that on TradeStation. This is where you'll find all the indicators, quantumtrading.com. We've got MT45, NinjaTrader 7.8, and TradingView. TradeStation is coming. I can assure you it is. Both 9.5, which is the partnership between TradeStation and Interactive Brokers. If you have an Interactive Brokers account, which we do, we run it through TradeStation, you have the advantage of trading a deep discount brokerage using the TradeStation platform, which is fantastic. It's a very powerful platform. TradeStation Securities version 10 and above has all the bells and whistles, got radar screen, all the goodies. Really, really neat platform, very exciting. We'll be doing a lot on stocks on that, and we'll also be doing a lot on time and sales and market depth and all that good stuff too, showing you how to trade intraday stocks using that particular platform. Once we've done TradeStation, got that launched, we're going to be dropping back onto TradingView, and we're going to port across the indicators that we couldn't code at the time because we didn't have the required flexibility in the Pine script we have now. We've got object drawing and line drawing. It gives us the option to move all those indicators across. So if you have the TradingView package, which I think is about $600 and something at the moment, you're going to get all the other indicators for free as a free upgrade, which is great. And then we will realign the price with the MT4, so those two will be the same price point. Thereafter, we've got quite a few other indicators to develop. Remember, if you invest in the full package with us, doesn't matter which one, you will get all future indicators we develop for that particular platform free of charge. It's our way of saying thank you for investing with us. We're going to be doing multi-charts once we've done one or two new indicators. Then we're moving on to multi-charts, and then perhaps we're going to be looking at something like Think or Swim. I'm not sure where we're going on from there. This is the Forex Education Program, which is at quantumtradingeducation.com. It's called the Complete Forex Trading Program because that's precisely what it is. And finally, over at Anna's site, annacooling.com, you'll find all the latest posts. You'll find all the books there. They're all up on Amazon, both in Kindle and in paperback version. So there we go. I think we're done for the day. Thank you so much for coming along today. I hope you've enjoyed it. And we will be back next week for the London Forex session at 7:45 UK time. So enjoy the rest of the trading day. Enjoy the rest of the trading week. And we will see you next time around. And thank you very much for coming along today. So see you soon and bye for now.